Hello and welcome to Simply inTAXicating. The GST journey has almost entered its last leg, with only two key issues pending before the GST Council. One is, of course, the cross empowerment, which has been put on the back burner. The other issue is the model law, the version 2 of the model law, which has been made public not for the feedback from the trade industry, but only for the information sake. The GST Council at its next meeting on December 2nd and 3rd is going to peep into it. Maybe they would be discussing a few provisions and put its stamp of approval before it goes to the parliament. However, the GST model law has made quite a few interesting changes. I must give credit to the policymakers. They have increased the quantum of refund on ad hoc basis from 80 to 90%. Last time it was 80%. So we will certainly give more credit to the policymakers, all those, the team which worked on the GST model law. But before that, we have three domain experts who are going to give us little wider views, some of the good aspects, some of the bad aspects, and perhaps a few ugly aspects as well. So we have Mr. Pratik Jain, the national leader in indirect taxes from Pricewaterhouse, our knowledge partner also, Mr. Sridhar, Senior Vice President from Hindustan, Coca, and of course Mr. Singh from GST Network. Very critical role they are going to play in days to come. So Pratik, let me start with you. Tell us briefly about some of the good, bad, ugly, whatever. I mean, what are the key changes which have been made in this policy model law?
So I think there's a lot of hard work which has happened. They had received more than 40,000 representations. Seems that many of those representations have been gone through and there have been some changes. Let me just articulate some of the changes that industry would like, really. One is the definition change. So the term security has been removed for the definition of goods, which I think was always the intention. Other is there is a specific mention that subsidies given by the central or state government will not be taxable.
Right.
So there was a concern in the first draft law that things like fertilizer subsidy, sugar subsidy given by the government, or even let's say a sales tax deferral, where you get it from the government back, whether that will be taxable or not. So that has been taken care of. And then supplies to SEZ will be zero rated. That would mean that there will not be a cash flow issue, which earlier the industry was really worried about. Absolutely. So I think there are good things which have happened, and then there are several other things which we'll discuss maybe during the course of discussion on the compliances and the paperwork part of it.
Okay.
One surprise, which really is a surprise not discussed earlier, is this anti-profiteering clause, which says that whatever benefit industry is getting, either by way of a reduced tax rate or increased input tax credit, has to be passed on. I think it's very, very difficult kind of a provision to implement. We have seen Malaysia, which introduced a similar provision, is struggling.
Right.
Australia could not do it for a long time. So that's something which really needs to be
that maybe we will
and
take
one
views, yes.
Other point is which has not been addressed at all is a place of supply for service sector. They had said they had demanded for a centralized registration, which has not happened.
Right.
But we were expecting some more clarity to say that where exactly tax will be paid by the service sector, things like insurance, banking, telecom.
Right.
Because the destination state is final, that where my consumer is located, that is okay. But from which location do I bill? Will I have flexibility to bill from any location?
Right.
Is something which we need to be addressed. So that has not been done.
Okay. So we will move to Mr. Sridhar. Of course, the good part.
Yeah,
bad,
ugly,
of course, we will have
one
more
thing that I really liked in 15 is they have the valuation provision, they have slightly tuned it. The discounts that are allowable, the discounts are not allowable, have been grouped in one common place as saying that it will not be a part of value if this and if that. Okay. So that is really make it much more crystal clear as compared to the earlier draft. Right. I think that is really very welcome.
Mega improvement, yeah, right.
Because now what is includes, what is excludes is very clear.
Right. Okay.
That is something really appreciated, and I would echo what he said about the opening stock credits as far as first stage dealer and second stage dealer are concerned. That really brings about a lot of focus. And I for one, I was also very appreciative of the fact that they have made a small distinction between composite supplies and mixed supplies. Okay. I like that thought process, because that really would bring in some more clarity.
Yeah. Right.
And as far as the where there's a need to be liberal, they've been liberal in the drafting also. And last but not the least, one small ask could be is that As far as these subsidiary cesses which are going to subsume, now there is nothing much which has come on the transition provision.
Okay.
I'll give you a simple example. In the state of Andhra Pradesh, VAT is payable on sugar.
Right.
Okay, at the rate of 5%. It exists in the entry and it's a part of the schedule. If I'm not mistaken, entry 108 of schedule 4.
Okay.
Now it's payable at 5. If you paid tax in Andhra Pradesh and you had stocks of sugar in Andhra Pradesh, you'll be entitled to carry forward.
Okay.
And correct me geographically, even in Telangana, because there's 2 states.
Right.
Now, but the best part is there is no union provision reflecting of this on the upper side with regard to the sugar cess as far as the union, because the list of eligible duties includes central excise duty. They've even put additional duties of special importance.
Yeah.
All the entries have been made 0. I don't know why they've put the entries which have been made 0.
Okay.
But this has not been really given effect for. Nor there is any word, the final word on that from the council on this.
There's a couple of points which I just forgot. One is that input credit provision for capital goods has been liberalized.
Right. Okay.
There's no chapter-wide heading which was there in the earlier law. Now it says anything which you capitalize in your books and use for furtherance of business is allowed as a credit.
Right.
Although they have staggered the credit for few capital goods in 3 years, which is fine. But and also for e-commerce, they have done away with the concept of aggregators. So all the aggregators now will fall under, if they fall under e-commerce schedule, they will do it. Although, of course, they have power to notify someone to be an aggregator later. But there was a lot of overlap between aggregator and e-commerce in the last draft. So that's also good.
Right. Okay.
But then what I like in the credit definition is intended to be used is also covered now.
Okay.
That really has brings about, for new green fleets, whatever you plan to do would not run out of protection.
Right, absolutely. Let me go to GST network. I mean, from GST network perspective, do you see anything good in this model law? And if possible, even the bad part which will create some problem for the GST? Not necessarily the bad. I would rather say that probably unintended or probably something which may create some distortion, a little more difficulty in terms of IT implementation, etc.
I agree with what Pratik Jain Saab and Sridhar ji has said. A lot of hard work has gone into this preparation of revised draft, and officers have worked very hard day and night to incorporate the suggestions made by the industry. And you can see that many of the provisions have got clarified, which have been mentioned: provision of capital goods, provision on ITC. There is no ambiguity now that whether it is related to outward supply or to the business or in the furtherance and course of business. Similarly, in case of time of supply, they have made very clear provisions when invoice will be issued and what is time of supply when. And for advance, now they have clearly mentioned the receipt has to be issued. Earlier, there was some ambiguity whether invoice will have to be issued. Similarly, they have, from the perspective of the implementation, which involves a number of states and question of compensation, they have made the provision of cess.
But if you look at the cess law that has been drafted, I had a last look at it, there is one small issue there. It says for a person who's on a composition, you don't have to pay. So therefore, there is a chance that the cess would not be a single point. It looks like it's going to...
As per the compensation act, cess is creditable.
Yeah.
And it will be levied at every stage.
Yeah, that's the point.
And its credit can be utilized for payment of cess liability.
The point is to expect a distributor.
But cross-utilization is still not
there. Are so many distributors, for example, of cars. Let us take luxury cars.
Right.
What do you expect a distributor of greater than 50 lakhs of a luxury car distributor to have knowledge on cess for him to be talking about cess?
Right.
And if that is extended to, let us say, I don't know, because there is no such intention, it appears, for luxury watches also costing about 25,000. There were some reports in between. If that is so, we need to see the impact in the hands. If you collect it in first point, I think we in our earlier programs, we discussed this. We discussed the model of Bangladesh also. The model of Bangladesh is supplementary duty is levied only once.
Right.
It is not levied more than once. So, and the value is fully collected. Now, therefore, if you ask your distributor to pay it, who's on the point of chain in the trade, I think it's really going to make it cumbersome.
Okay, but you should give them credit. At least the input has been allowed.
Yeah, correct.
And that's a mega relief.
One point on the advance. I think industry is quite concerned about advance getting tax, because
Right.
it's not too much of a concern that you are paying tax upfront. But many cases when I receive advance,
Right.
I don't know that from which location I'll supply the goods. And it's happened, let's say, could happen in automobiles.
Right.
That I have one factory in Haryana, one in Gujarat. I have taken advance from the distributor today, but I don't know whether I'll supply the car from Haryana or from Gujarat.
Or Gujarat, yes.
So which tax do I pay?
Right, exactly.
Right? And I don't know how from a GSTN perspective it will be taken, because it seems to me that if I don't know where to pay, then I'll pay in some escrow account and then later adjust it, etc. So
Something, yeah.
how will you tax advance, particularly in a situation where I don't know at what point in time will I supply and from which location? So
Absolutely.
that is one big issue which
big
needs to
issue,
get
yeah. How exactly you are going to deal with this? It's going to be a major challenge for you.
No, from the GSTN perspective or compliance perspective, it is very clear that advance has to be related to a GSTN. You should know which state entity has received this advance, and it will have to make the tax. But if you see the definition of consideration, if advance is a form of a deposit, it is not taxable.
What is the difference between advance and deposit? And sir, while
If it is not against a specific good or services, so it will be a deposit. When you apply that deposit to a transaction, then it becomes a.
So that may be one of the ways of dealing with it, and if they clarify in that respect, because I have received an advance to say I will sell you 50 cars in next 6 months, but I don't know from which location. So either I change my accounting policy, etc., to say I should bifurcate the advance in 2 states for 2 GSTN, which is not how it works.
It will create
the
problem,
other
yes.
problem which will arise, and a significant problem industry is concerned about, is this concept of inter-office service transactions.
Right,
So the way it is worded, they have addressed now the inter-office or let's say FOC supply from one entity to another.
Right.
Now they have said it's only going to be taxable in case you are related,
Right.
or you are transferring from one branch to another across the state. But inter-office services has not been touched. So the implication is that if I have head office and I have several branches,
Right.
then of course head office houses your CFO and CEO and other people, then you have to actually cross-charge the other branches
Yes.
on some basis. We don't know what basis they will prescribe, and that is going to be extremely cumbersome, and particularly for service industry, where let's say a software company, they may enter into a contract from Bangalore, but part of the work will be done by Hyderabad office, part of the work will be done by Chennai office. You keep billing each other,
Right. Absolutely.
right? So that is one aspect which needs to be looked
Mr.
at.
Sridhar, they have also borrowed the definition of associated enterprise as per section 92 of Income Tax
Yeah,
Act.
but
So this will also create problem in
no,
here.
but then import of services from overseas entities. If you are importing any service, it will be only if there is a cash transaction to it. It will not affect on an imputed basis.
Right.
Your point is, if there is some addition made by the transfer pricing officer, would it have a corresponding impact as far as GST is concerned? I don't think so. That position is not there.
But without consideration, has been removed for related parties
Yeah.
also? Or
No, it won't be for related parties.
So most of the cross charge which I get is from related parties.
No, but then I'm talking about
It was
without
the-
consideration.
Without
No, but one
consideration.
minute. Just put it like this. Let's say there is a transaction. You are supposed to charge 100. I think what I wanted to explain is like this. The arm's length price according to your transfer pricing report should have been 100. The
Right.
transfer pricing officer determines at 125.
Right.
25% is extra he has determined. Then if the addition is made by the transfer pricing officer, my point is on that 25, there is no question of a GST at this stage.
But is there clarity on this? That there would be absolutely GST, the officials are
From
not going to make...
the way this provision is drafted, it doesn't appear. So I'll tell you one reason. For example, there is one section which is similar to 285BA of the Income Tax Act. They can secure information very similar on a pari materia basis from every authority.
Okay.
When they have desired to adopt so much and they have drafted so much, so much of thought has gone in, so much of preparation has
The
gone
similar
in.
provision
If
they had
this was-
actually last budget
if-
also.
If this was the intention, then they would have put this in even in that case. Even an addition made by a transfer pricing officer would deem to be a supply transaction.
But I beg to differ with Sridhar Sahab. The valuation rules are clear. Only in case of non-related party transaction, the transaction value will be the basis for taxation.
Right.
But if there is a related party, then whatever consideration becomes immaterial. It has to be the same value. What is being paid in non-related transaction will prevail.
One point is there, sir. There was a determination of valuation rules which came with the model draft 1. That is not a part of the
That is
model
not
draft
part of
2.
it.
I
Yes,
just wanted to
yes.
keep
No,
that
but
informed.
that
It is
has
not that.
But
It
that
is not.
has already been passed by the council.
No,
That
sir, it
valuation
doesn't.
rule,
It doesn't appear so because that came to us as a draft and we have commented on. For example,
No,
stock
but
transfer.
there is a section on valuation in this draft law itself, which is very clear that in case of non-related transaction, the transaction value will prevail.
Correct.
But in case of related, it will
but
be.
I
You have a right to examine.
Right to
in case of
examine.
related, and that is another question that industry had raised, that in a B2B supply, okay, today it makes sense to have related party provision, because if you don't pay excise duty properly, it becomes a cost. You don't pay it subsequently.
Right.
But in GST has to be paid on each supply. Ultimately, you will get GST on the end price at which goods are being sold. So if I and Sridhar are related, I am selling it to 100 rupees. He is selling it further to unrelated party, let's say at 120. On 120, you will get tax. Why do you want to examine this 100? What is the reason? Today, in excise duty, you need to, because excise duty is the first point
And then
tax.
GST is a transaction tax. I have got one more reason why to differ from our friend from GSTN. Transaction tax. But the income-based provision of the 92, section 92, as far as the income tax law is concerned, the addition would be challenged. So the transaction cannot wait for the addition challenge to be completed, because it may take 2 years, for example.
Yeah, that's
it
right.
may take
Correct.
2 years
Right.
for the addition challenge to
Right.
complete.
Right.
Fortunately for us, let us say if there's an APA, I can ask the converse question.
Right.
If there is an APA arrangement, then would you agree the APA price?
Right. That's an important question, actually.
If there is a service arrangement
Right.
and there is an APA price, it's coming across, then would they accept the APA price? I have never thought of this dimension.
Right.
Maybe
But
since
it
you
should be
raised this
binding
question,
from, you see, if you look at APA, for instance, APA is a bilateral thing, between the
No,
party and the
unilateral
government.
APAs are also
And unilateral APAs are also there, but it's important whether the other revenue authorities are going to follow that. Because in any case, they are borrowing a lot of provisions, a lot of expressions from
international
different tax
practices.
laws. Right. And related party
valuation
thing,
rule is
because
the
even
international.
now, presently what happens, if there is a case made by income tax, some additions have been made, central side, DGCI, they borrow the information and they issue supplementary invoices, so-called notices, etc. So, is there going to be a possibility of similar kind of
needs to be
situations?
examined more in depth.
That needs to be examined, yes. But on this point, the supply without consideration, how do you look at it? Of course, a lot of clarity has come, but at the same
That's
time,
a major clarity, because what earlier was the interpretation was that if I have a scheme and Sridhar's company would have these kind of schemes, buy 10 get 1 free, for example.
That is now clarified.
The free one which you get was earlier seemed that you had to impute a value
tax, right?
and tax. Now that's not there. So I think that's a very major relief.
Situation in instances where there would be supply without consideration, but it's going to be taxed. There are a few cases which will happen like this, because that provision, they are not.
That is exceptions are for related party transactions. So if there are related party, then supply.
What the first focus of the conversation was that if there is a trade happening between a company, you can take it any consumer goods company, with the distributor, there is no relationship for it to be affected for the zero products. Of course, whether for zero products you will reverse ITC, that's a separate issue by itself. That's coming. No, but that's not the point. The point here that there is no relationship between them, because between the trade and the company which manufactures and sells to the trade, there is no relationship.
Unless there is a provision which says unless it is in the nature of gift or sample.
Right.
So I'm not sure whether what is the interpretation of gift.
Right.
They should not say that something
there is
which
one more
free.
dimension. Since we are going back to transaction value,
Right.
there is that provision which you ask can also be interpreted. That let us say that I have an in-between marketing company, and I sell the goods to a marketing company, and the marketing good company in turn sells. The value will be picked up throughout the chain.
Right.
So I don't think so. That situation also exists. In other words, Ujagar prints will not resurface in the process.
I just want to say something on this discussion of what should be the valuation for stock transfer between the states and on having centralized registration. See, the design of GST that we are implementing is a dual GST. and the nature of federation that we have, where the states are very powerful, they have their sovereign domain, and they are doing the most of the governance functions, welfare functions, and there is a revenue imbalance. They want their revenue to increase,
Right.
because their expenditure is much higher than the revenue that they have. So in this whole constitutional arrangement, only the dual GST was possible, and in this dual GST, the tax has to go to the destination state. So in case of centralized registration, that is, it is easier said than done. That is not possible. Then the whole of this scheme falls apart.
And I kind of agree with that. I think the demand of service sector was different. So when they say centralized registration, they said we recognize the fact that tax has to go to the destination.
Right.
That's not a problem.
Right.
Okay. But please allow me to pay IGST. So let me take an example and where we're coming from. I'm an insurance company. Okay. I issue all the policies, etc., to the customer from Gurgaon, and my entire management is sitting here. I take all the decisions here, etc., and therefore this is an office which is providing the service. Let's say. Now I have branches also. So I have 15 branches in different states. Those branches will deal with the customer. They will explain them the policy.
Yes,
they will
service
collect,
branches.
The service branch. They will collect money, etc. All they were saying was that don't ask me to register each of those branches and pay service tax and all. You allow me to pay from Haryana and I'll pay IGST. So I'll pay IGST Maharashtra, I'll pay IGST Karnataka. So tax is still going to the destination state.
Yeah.
That's not a problem. But I am getting this flexibility of raising the invoice from one location and paying by way of IGST rather than taking this 15 registrations and doing this compliance. And even if I take a registration, let's say for the branch, what if Haryana comes back and says that, look, you have taken a registration for the branch, but you are actually issuing the policy from here.
Right.
So you should not have taken the registration there, you should have paid tax there. So at least that clarity needs to be there.
But if you are incurring expenses in the different states and you are paying something as SGST, you will be getting SGST credit. So how will you utilize that credit?
That I can transfer through ISD mechanism because everything is related to my head office.
So that I think is possible in this arrangement itself, except for the fact I think that if you have a FE, you need to declare that.
Now I have two problems in this example. First, a service provider doesn't know that do they need to pay tax from Haryana because I am issuing the policy from there, or do I need to pay tax in the branch because those branches are interacting with the customer. If I issue if I pay tax in Haryana, how will that credit get transferred from different branches?
Right.
And it seems to me that will be viewed as a service provided by the branch to the head office, and therefore you will need to raise a bill from the branch to the head office on what value we don't know. Okay, and it will lead to disputes in terms of value unless you have a very clear value that cost plus 10%, what is the cost, etc.
Right.
Do you really want to get into that? I think the simpler method would have been allow them to pay tax from Haryana, pay IGST, ask the branches to transfer whatever input credit they have by way of ISD to the head office. And there is one more point, since we are discussing on this, is important. Location of service provider needs to be clarified in case of B2C supplies. In case of B2B supplies, even the location of service recipient needs to be clarified, because if we as a consulting firm are providing a service, let's say to Coca-Cola, okay, now the contract is in Haryana, but they say that okay, part of the work will be done in Karnataka, part of the work will be done in Haryana. Now, as a service provider, do I need to split the invoice? Because who is the service recipient?
Right.
They have not said the service recipient is the person or the office which has entered into a contract with me. That provision is only for export. So for domestic supplies, we don't know. So one of the answers when we were talking to one of the officers, they said, "What is the problem? You split the invoice." But splitting the invoice is not practical, right?
Let me ask you one very important question, which has been there in my mind for quite a long time. How exactly you are going to do this matching, the input-output invoice? And have you really worked out some kind of system? I mean, how easy this is going to be? Otherwise, the credit is going to get blocked for the industry.
First of all, I think this is a new system, a unique system, which is not yet there in the world. But we are making full efforts, and we are hopeful that this will come up as a successful design which will be emulated by other countries. Now, if you read the processes and the rules, they already specify how this matching will take place, and this is an outcome of discussions, deliberations over the last 10 years. The IT group headed by the erstwhile Nandan Nilekani, all these people deliberated, and then you have that report, and which clearly says that what the basic details that will be uploaded in case of B2B, in the supplies to registered taxable persons will be the invoice level supply details
Okay.
and by the supplier, and these details will be auto populated, auto drafted to the receiver,
Okay.
and the receiver will then check and accept them.
So they will do the matching part.
So we are basically distributing this matching to the recipients and the suppliers.
Okay.
They will interact between themselves and reconcile the difference that is there. We have a similar sort of arrangement in case of income tax, where the TDS, someone who deducts the TDS uploads it,
yes.
and it gets auto populated to the respective income tax assessees. So in India we have a precedence, and we hope that this model where the supplier only basically uploads the main data and the recipient has to verify, validate and correct and add the missing ones.
I could support what he says also in one way. This GSTN compliance rating, there's a specific section. I've forgotten the section.
Yeah, they have talked about it. Yeah.
That would really help. But the question is, how long will it take for it to settle down? Let us say we do 8 quarters. 9th quarter, the GSTN, based on all the 8 quarters of performance of mine vis-a-vis the GSTN, can upload a rating of mine. And in the 10th quarter, you as the buyer of goods can go and see whether I am a creditable supplier for you to enter into a contract.
Yes.
But then we need to give that time space.
Perfect. So on this note, let me thank my guests first and wrap up this. There are so many other issues, of course, we need to discuss again. We read again and again, because there are so many other interesting things in the model law. Quite a few good things which have happened, which are going to be appreciated across the economy by all the sectors. Let's give credit to GST network. They have a clear vision how they are going to do it, how the auto-populated things are going to work for the matching part. And the credit side, of course, quite a few steps have been taken. Maybe the GST Council can perhaps look into it, that the credit which has been blocked today. So percentage of unblocking can perhaps be rolled out in future, like capital goods, for instance. Similarly, the compliance side, the registration side, centralized registration side, which is going to be a really Herculean task for quite a good number of service providers like telecom, banks, financial institutions, etc. So GST Council needs to take into account all these things. We can understand that they are making a conservative beginning, perhaps they are a little over worried, perhaps that their revenue will be perhaps lost. So maybe the confidence will build among all the state finance minister and the GST Council as a powerful body. Quite a few good things have been left out. Probably those will be incorporated in future. The so-called notices, confirmation period, so-called period. Those aspects we have not discussed so far. We will discuss again in future. Thanking you all for watching TIOL Tube.